This is East Asia Tonight.
Good evening, I'm Shelley Edwards. Tonight's top stories. China warns the Middle East conflict risks spiraling out of control as the US and Iran trade threats of destruction. And the head of NATO says a 22-nation group is forming to reopen the Strait of Hormuz. Now, the price of Brent crude holding above $110 a barrel as markets weigh fresh threats to energy supplies against a possible surge in Iranian oil. And China moves to soften fuel price inflation, lifting retail caps for diesel and gasoline by only half the expected increase. But prices are still nearing 2022 highs. And US-Israeli strikes on Iran are intensifying. Tehran warns of a tit-for-tat response if its energy plants are targeted, including laying sea mines to disrupt Gulf energy routes. Ahead on the bulletin, global energy uncertainty is rising and Taiwan is exposed. Years after going nuclear-free, it's again eyeing a step towards restarting its mothballed reactors after a referendum to bring one online last year failed. Will Taipei succeed this time around?
I'm Deborah Wong in Hong Kong, where the Milken Institute's Global Investors Symposium just wrapped. We heard lots of conversations about the conflict in the Middle East, but there are also bright spots, for instance, in emerging areas like tech, AI and consumption, especially against the backdrop of China's new 15 five-year plan. We'll unpack all that and more at 6 p.m. on East Asia Tonight.
China says that the Middle East could spiral into an uncontrollable situation should hostilities escalate further. Well, the warning comes ahead of a looming deadline imposed by U.S. President Donald Trump for Iran to reopen the Strait of Hormuz, through which around 20% of the world's oil and natural gas supply normally passes.
武力只会导致恶性循环。中方强烈呼吁当事方立即停止军事行动，回归对话谈判，不要让这场本就不该开始的战争再继续下去。
Well, efforts meantime are underway to reopen the Strait of Hormuz as fears mount over the potential fallout of Mr. Trump's ultimatum to Iran.
I know the president was angry because he feels that European and other allies have been too slow. The good news here is that since Thursday, a group of 22 countries, most of them from NATO, but also Japan, Korea, Australia, New Zealand, the UAE and Bahrain, most of the other countries from NATO, coming together to implement his vision of making sure that the Strait of Hormuz is free, is opening up as soon as that is possible.
Well, with the conflict now in its fourth week and no signs of easing, fears of prolonged disruption in the Strait of Hormuz are keeping investors on edge, pushing oil prices higher. Well, Henry Yin joins us now with the latest on the energy markets.
Well, thanks, Oteli. Investors are weighing the risk of further escalation in the Middle East, alongside a stark warning from the IEA chief that the current energy shock linked to the Iran conflict could be even more severe than the oil crises of the 1970s. Well, oil prices are holding above the last week's $110 a barrel level as investors weigh threats to energy facilities in the US and Iran against the potential release of millions of barrels of Iranian oil into global markets after Washington temporarily eased restrictions. Checking the price of Brent at the moment, holding slightly above $113 per barrel level, while WTI is hovering just below 100 threshold over that. Well, the International Energy Agency is also consulting governments on whether to release more emergency reserves. Its chief says more than 40 energy assets across 9 countries in the Middle East have been damaged, and it could take time for supply to return to pre-conflict levels. IEA Executive Director Fatih Birol warned that the situation in the region is now worse than the 2 major oil crises in the 1970s and the 2022 natural gas crisis, all put together. Several analysts gave their take on the outlook for oil.
every country is going to look after themselves. You've already seen product export bans from China. India and Thailand have said to prioritize their own country supplies. Korea has come out and said can't export more than what they did last year. And that could get revised even more down the line. So it's all about energy security.
If the prices remain elevated for substantial amount, for sustained amount of time, that the governments will start intervening fiscally. We have seen it in Korea. They have a lot of policy room. They can subsidize some of these energy prices. Probably we're going to see it in Japan. Some of the other markets in Asia, like the Philippines or the smaller markets, they have a lot less room to do that. So you're going to see this divergence in economy.
Almost 20% of global supply, particularly impacting Asian market. EU gets about 8% of its LNG from Qatar, but this is a global story, right? Because you can't take that much LNG out of the market at once without it impacting all buyers. So we've seen prices increase across the board, Asia and Europe. It's really a question of duration.
Well, China, in a move to cushion rising fuel prices, has limited a price hike for diesel and gasoline to about half of the expected amount. Still, the adjustments are the largest on record, lifting price limits close to levels seen in 2022 following Russia's invasion of Ukraine. But the country's state planner says that it will raise maximum retail diesel prices by about $160 per metric ton as part of regular price review. It will also increase retail gasoline prices by about $168 per metric ton. Well, for more, we have CNA correspondent Han Se-hui live from Beijing. First up, Se-hui, give us the situation, the latest update on the ground in China, and how has this oil shock from the Strait of Hormuz actually been playing out in the economy?
Well, first, to give you some context, China is the largest buyer of oil, and half of their crude oil imports passes through that Strait of Hormuz, so making it a critical choke point. And so just with the sheer volume of crude oil imports really makes China vulnerable to the energy shock situation that's currently happening, and it's rippling through its refineries as well as its manufacturing sector. And already we're seeing knock-on effects. We're seeing price hikes in fuels, impacting its chemical industries as well as impacting consumers. And this is amplifying existing challenges to the Chinese economy. It's weakening domestic demand as prices go up. And this is also increasing deflationary pressures as consumers are not buying anything and companies are cutting their production. And this really weakens the export competitiveness for China. And I asked an analyst as to whether this would derail China's reaching its GDP growth target of between 4.5 and 5%. And they're saying that this really depends on how long this Iran conflict will go on. But at the same time, it's important to note that China has significant buffers to weather the current situation. Let's take a listen.
From what we're hearing, although the information from the region is quite patchy, some of the Iranian crude is still going out through the Strait of Hormuz to China, and Gulf producers, where they can still export, they're trying to prioritize their Asian customers, including China. So there is still oil flowing. You know, just the size of the Chinese market is a bit of a buffer because all your suppliers want to make sure that their biggest customer is comfortable even in a time of crisis. Then China also has massive oil stocks domestically, which it hasn't started to draw down. Both crude products it might have started to use.
Well, Se-hui, what's the mood on the ground? How are ordinary Chinese reacting to rising fuel costs?
Well, it's not very rosy at the moment. There's a lot of displeasure. We're seeing a lot of videos online showing long queues at petrol kiosks. Beijing raising the fuel prices the 5th time this year and the largest price hike. It has introduced emergency curbs, bringing down prices to half. Authorities are saying they're enforcing these temporary regulatory measures to maintain market order and as well as to protect consumer interests. Now, some netizens have thanked the government, saying they're finally intervening into this. But some of them are also joking, saying that in this conflict, neither the U.S. nor Iran have won the war. But who's the biggest winner? They are China's petrol companies. And recently, I've also spoken to some of motorists
they have expressed some huge displeasure to the price hikes. Let's take a listen.
6、7块就已经很恶劣了，你知道吧？趁着这个啊，你们就涨价，不是说中国油船过来了吗？为什么还要涨价呀？
每一次的油价的上涨，就是运输费用的上涨，大家生活成本的上涨啊，我就不清楚这个到底是谁在控制这个事儿，始终让这个东西涨的速度呢比别人快。
那我可能这开不起了，我这要换电车了。哦，是，我会考虑这个事儿的，太贵了。
So you just heard there the female driver saying that she possibly could transition to electric vehicles. And electric vehicle companies are taking opportunity of this. BYD saying that they'll give discounts to potential customers if they make the switch. But it's not just fuel prices that are going up. Jet fuel prices are also increasing. Chinese airlines are raising their surcharge cost, with Hong Kong Airlines leading the charge. And so potentially air travel could be more expensive with ticket pricing going up.
So wait, stepping back, let's look at this big picture question here. This crisis, essentially, what does it mean for China's long-term energy strategy, and can it reduce its reliance on choke points like Hormuz?
Actually, in this situation, China is already partially insulated from this because over the last few decades, there's really been a lot of investment into electric vehicles as well as renewable energy. Already, China is the biggest power grid in the world with possibly the most advanced infrastructure in wind and solar energy. And so analysts are saying that Iran conflict has really vindicated China's push towards energy independence.
China continues to deploy, is the biggest deployer of renewables globally and the largest manufacturer. That continues. And I sort of hesitate to say that it's accelerated, but it is certainly on track, and it is certainly something that policymakers will want to prioritize and accelerate as they can. But I do think that in the near term, we're actually in a slowdown phase that will then, and maybe this sort of this increases the urgency for Chinese policymakers to solve some of those issues.
Well, analysts are also saying the big question is China's dependence on coal, because state-owned generators, local governments are still relying heavily on coal for revenue as well as employment. And so the question is, will coal consumption peak, or will there be a transition to renewable energy? And so analysts are also saying the impetus is really to innovate and move towards renewable energy, especially as electricity demand is going up rapidly.
Yeah, and also not a bad idea to think about switching to an EV now. Well, thanks so very much for that report, CNA correspondent Tan Si-hui in Beijing, and Henry as well, but he's going to be back with us with more business news later this hour. Well, time now for a short break, but coming up on East Asia tonight, markets tumble across the region after fresh threats over the Strait of Hormuz, and Israel's warning that the war could last for weeks. Hello again. It's time now for more financial news with Henry Yin. So, Henry, I believe like some few hundred, 500 specifically, business leaders, policymakers, they're all gathered in Hong Kong for the Milken Institute's Global Investors Symposium. And all of this happening against the backdrop of the ongoing tensions in Iran. Tell us more about that.
Well, that's right, Oteli. And the focus this year is on how global capital is shifting across the Asia-Pacific region, and from technology trends to evolving investment strategies, and whether next pockets of regional growth are likely to emerge. Now, for more insights, CNA's Deborah Wong joins us live from the Milken event in Hong Kong. Well, Deborah, she earlier mentioned moderated a panel on China's tech-driven growth strategy. Well, Deb, China is starting off the new 5-year plan with the crisis in the Middle East and ongoing trade tensions. So which sectors are experiencing the most shocks?
So aside from the most visible shocks, in the energy, oil and gas sectors that my colleague Tan Si-hui from Beijing just explained before the break, we are also seeing, panelists are saying, we're also seeing vulnerabilities in the financial services sector, given that financial risk management really is key to social stability. And so it could be one of the sectors that may be hardest hit in times of crisis. And panelists also did tell us about the US-China trade war, and tech war, in fact, could be aggravated. And so things like hard tech, where we're talking about AI infrastructure, data centers, logistics, as well as semiconductor and advanced chips, all these sectors could be the most vulnerable as well. And so the panelists all agree that, the Chinese companies have to be more competitive. They have to hedge their bets overseas also. They need to try to get more international partners.
Well, Deborah, in the meantime, China is going big on tech. So how confident are investors that the country can close the gap between expectation and reality?
I would say they are pretty confident, and their only reason is because tech didn't just happen overnight. We're talking about a momentum that's been going on for a very long time. It's just that self-reliance as a concept in terms of tech was a goal that was only officially enshrined into the 15 five-year plan recently. But, the momentum for tech has been going on for years. Panelists did talk about manufacturers right now in traditional industries pivoting to dark factories. We're also seeing a lot more Chinese companies, for instance, SF Express, as well as Jingdong.com. They are turning to drone deliveries, and that's increasing their productivity and also their efficiency. And one guest who runs an asset management firm in Hong Kong also points towards the IPO boom in Hong Kong, and she also says that tech ETFs have done well, almost doubling in growth over the year. So there's not just a fleeting appetite for tech stocks, but we're looking at a sustained interest, which investors say is quite necessary to fund innovation, which of course is targeting, closing these key technology gaps. Have a listen.
The financial sector, in terms of how to support innovation, is still a big challenge for us, and that's why, the government has always been emphasizing that technology financing is the number one priority for the financial sector. And currently, the state-owned sector provides most of the venture capital, which is not very healthy. Some part of the country, 67, 70%, 90% of the so-called seed capital, venture capital are provided by the government. I think we need to mobilize the private sector to do more in that area.
Well, Deborah, consumption highlighted as a strategic driver in the new economic plan. So how do investors view China's consumption story there?
We first need to take a look at China's changing demographic. We're looking right now at an aging population in Asia, and in China is, of course, included in that. And, essentially what that means is also a growing silver economy, because this group of people, this age group, they have the spending power and they have the time to spend. And so the panel is actually quite optimistic that, they can tap on this group of people. But they say that the government first needs to address social anxieties as a result of displacement of manpower due to AI disruption. They also talk about strengthening safety nets, social insurance schemes, as well as pension schemes to fully unlock their spending power. Let's have a listen.
For those aging society, from an investment perspective, the stable income is very important. Which one is the most popular character or kind of products in mainland China? We find out over the past 5 years, always fixed income. So that kind of products can provide investors relatively low risk but steady returns.
So China's economic planner says that the country's services consumption sector could actually hit 100 trillion yuan by 2030. Now, China is not there yet, but investors are quite optimistic they can reach that target, because they say that economic growth, no matter how slight over the last couple of years, has sort of generated cultural confidence in local Chinese brands. We've seen the meteoric rise of Laopu Gold, of Pop Mart. They're all based in China, and young Chinese, they're saying, are shopping now more for quality, affordable products, yes, but also quality. They're gunning for more local experiences in tourism as well. And the panelists that I was speaking to, they say that all these sustained interests in small startups, in private companies, and that really is something to watch. Henry.
Well, Deb, thank you so much for your coverage. CNA's Deborah Wong, live from Hong Kong. The war in Iran may have impacted the reputation of the Middle East as a safe haven for investment and capital, but some believe this is just a transitory disruption. At the Milken Institute Global Investor Symposium, participants discussed how capital flows might evolve as a result of the conflict and how Asia might benefit in what one expert calls the age of recurring disruption.
3 weeks in, the war on Iran continues to send shockwaves through the global economy. No surprise then that the Middle East conflict dominated discussions at this year's Milken Symposium in Hong Kong. One view is that this is yet another disruption in a constantly changing world.
What you are seeing is that the geopolitics, for example, what we have over the last 2 years, we started off with export control, and then we have FDI screening, and then we have tariffs escalation, and we have country origin rules, and so on and so forth. So in that context, if you take the Iranian conflict in the Middle East, for example, that is simply another disruption layering on top of that series of disruptions. So we are now witnessing is really in the age of recurring disruption. And businesses, of course, will have to react to that.
Already the war has led to some money moving out of the Gulf, which was seen as a safe haven. Hong Kong's leaders have said that the Chinese territory might benefit from some of these capital flows. But one economist notes that the Gulf countries are taking steps to ensure that what is now a transitory disruption doesn't become a structural one. For example, by still providing tax benefits.
I think that one of the most important items is the fundamentals and the policy anchors in countries. The fundamentals and the policy have not changed. This is a shock, an exogenous shock. So investor confidence is always affected when governments change their course with respect to policy. But this is not what is happening today. This is an exogenous shock. It is forcing a certain reaction. Capital flows always move through cycles. And even if this is going to be for some time, we believe that the bottom line fundamentals in the region are strong and should continue to be attractive for investors.
In the longer run, analysts say that the story might be one of increasing bets on energy security and defense. But investors may also work to diversify away from the US, with a growing view that the country is becoming less reliable.
I think the bigger picture, again, after this oil spike generated rally in the dollars, when this settles, whenever that may be, you're going to see the resumption of capital flowing away, on the margin, flowing away from the U.S. towards Europe, towards Asia. So I think for sure Asia is going to be a beneficiary of this. And this isn't a sell U.S., buy everything else. It's more, you don't have to invest as much in the U.S., you just need to invest more elsewhere from a diversification and risk management perspective.
And there's no shortage of risk in the markets, leading to some long days for investors. The consensus seems to be that the war on Iran will escalate before it de-escalates. And so, age-old advice seems to hold. Be proactive, not reactive. Look for opportunities, but maintain a long-term perspective in the face of volatility. Geraldine Yap, CNA, Hong Kong.
Well, equity markets in the region closing sharply lower as hostilities in the Middle East fuel fears of a prolonged conflict, raising the risk of an inflation shock and prompting central banks to hike interest rates. Well, Japan's topic has slid into a technical correction after chalking up more than 10% of decline from its record high reached on February the 27th. While chip heavyweights in South Korea let the Kospi decline by 6.5%. And major indices on Greater China markets also fell, prompting calls for the national team to step in amid the sell-off. Precious metal prices also heading lower. Gold wiped out this year's gains, falling for a 9th day as the war in the Middle East added inflationary risk and raised expectations for higher interest rates. And I'll be back with more stories later this hour. Back to you, Telly.
Looking forward to that. Thanks so much for now, Henry. Well, time now for another break, but coming up on East Asia tonight, Taiwan eyes step towards restarting decommissioned nuclear reactors as part of efforts to strengthen energy security. Get insight from our correspondent after this break. You're watching East Asia tonight, and here are the headlines we're following. China warns that the Middle East risks spiraling into an uncontrollable situation if hostilities escalate, as the clock ticks toward President Trump's deadline. That's as NATO's chief says nearly 24 nations are looking to secure the Strait of Hormuz. Oil holding above $110 a barrel as markets weigh fresh threats to energy supplies against a possible surge in Iranian oil. And Iran warns a tit-for-tat response if its energy plants are targeted, including laying sea mines to disrupt Gulf energy routes. State media are also releasing maps of power plants Tehran plans to strike. Well, the Middle East crisis stretching into its fourth week. The U.S. Central Command says that the Iran campaign is ahead or on plan as the Israel Defense Forces begun a new wave of strikes on infrastructure in Tehran. Well, the conflict unfolding as Iran threatens retaliatory strikes against U.S. allies and Gulf electricity grids, responding to an earlier ultimatum by U.S. President Donald Trump. Well, Mr. Trump on Saturday evening issued a threat to attack Iran's power plants if the Strait of Hormuz is not open within 48 hours. Well, less than a day remains before that deadline expires. The Revolutionary Guards vowing to close the strait and respond at the same level if Trump follows through on that threat. Well, Ross Cullen is tracking developments for CNA, and he is live speaking to us from Van in Turkey. So, Ross, President Trump's 48-hour deadline, well, that is soon approaching. What kind of responses have we heard from Tehran so far?
Yeah, that's right. We are watching for that deadline to expire. Ateli, I'm sure, being watched around the world as well to see if President Trump is satisfied with the position from Iran, if it has fully opened the Strait of Hormuz to his satisfaction. If not, we could see attacks on power plants. And then we have had Tehran threatening a tit-for-tat response, irreversible destruction to vital infrastructure, energy infrastructure in US-aligned nations, so particularly Bahrain, Kuwait, the United Arab Emirates, Qatar, places in the Gulf that host US forces. Also a threat that if the United States does carry out that attack on power plants, then the Iranian forces will mine the Persian Gulf. So that would simply put the situation in terms of the shipping blockade and the transit of oil in and out of the Gulf, the transit of LNG in and out of the Gulf in a very serious situation so far. We also know that there are these reports that the United States is sending 2,500 US Marines from the US and from East Asia with the possibility of using them to seize the strategic Iranian island of Harg Island, from which the majority of Iranian oil exports depart. And there is a threatening, a very serious response from Iran if that were to happen.
So, Ross, as we are counting down to that deadline, what about other countries, though? I mean, how have they reacted to the situation?
Well, just speaking a little bit earlier here, Telly, to a local government representative in the city of Van, he was saying that there is a real anxiety, real concern in these border regions, places that border Iran, if the situation were to spiral into a wider conflict. In fact, that's been the warning from the Turkish Foreign Minister, Hakan Fidan. He has said that Turkey is seriously concerned about the evolution of the conflict if it turns into a wider regional war. We've heard a lot also from Asian economies because the vast majority of Iran's oil exports, the vast majority of Qatar's LNG exports are destined for Asian economies as well. And we've seen the hit to stock markets across East Asia. We know that Seoul has said there won't be significant supply disruptions for now, but it's monitoring the situation very closely. Japan also saying not minded right now to call Tehran, ask for specific permission for Japanese ships to transit. But Japan has been aligning with other G7 members potentially to launch some kind of escort mission for shipping through the Strait of Hormuz. And China has said it is very concerned, calling for an immediate return to negotiations and an end to what it says is this vicious cycle of strike and counterstrike by the US and Israel and Iran. Ateli?
Oh, lots to keep an eye on. Thanks so very much for that report. Ross Cullen covering the conflict for CNA from Van in Turkey. Now, the tit-for-tat threats between the U.S. and Iran to widen their targets in the war are marking an escalation in a 3-week-old conflict. Well, earlier, CNA spoke with an expert who told us that both sides could ramp up the intensity of their attacks as the conflict reaches a critical point.
Their goal is to generate economic chaos around the world, to increase pressure indirectly on the Trump administration to back down. If they try and take the Americans on sort of head-to-head with military forces, they'll lose because they simply don't have the military forces to win in any battle. So this is their strategy, is to cut off energy flows, to cut off oil exports, to create that economic chaos around the world and increase it over coming weeks. So in the end, the Americans back down.
And by widening its potential target set across the Gulf, the fear really is, Malcolm, that Iran could raise the risk of miscalculation. And if so, what kind of strike would force a much wider regional response?
Well, look, I think that what we're facing is the prospect that the Trump administration has already given a 48-hour deadline, which I think runs out in about 24 hours, in terms of opening up the Strait of Hormuz. If the Iranians don't do that, then President Trump has threatened to attack the energy infrastructure across Iran. Iran has basically said that if Trump does that, then they'll retaliate with attacks on not only energy infrastructure, but also desalination plants. I think that would definitely bump up escalation risk, because then I think the Trump administration would dramatically increase its strikes on Iran. I think that the possibility that Iran could attack shipping, blocking the straits, attacking oil and natural gas fields in the Gulf states could also increase escalation. So there's a number of pathways going forward that could see greater escalation in the coming weeks.
And from what you're saying, would you say then that the next 24 hours, when that deadline passes, could possibly be a hinge moment in this conflict?
Absolutely. If the Iranians don't back down, if they don't open the Strait of Hormuz, then I think it's likely that President Trump will carry through with his threat to attack energy infrastructure and essentially turn off the lights across Iran. If the Iranians then retaliate with their threatened attacks on desalination plants, that's going to create a massive humanitarian crisis, because you've then got tens of millions, if not hundreds of millions of people across the Middle East without access to drinking water. This war will continue for several weeks, if not longer. And so the risk is that we reach higher and higher levels of conflict. The Iranians continue to close the Strait of Hormuz, and the economic damage to the global economy and to energy security continues to mount. So I don't see this war ending anytime soon. And certainly I think we're at a critical point now where it could rapidly ramp up in intensity.
Now, Taiwan could propose as early as this month a reactivation of its decommissioned nuclear reactors. This comes as the island looks to shore up energy security amid growing fears of supply disruptions. Well, the shift marks a reversal in its energy policy. After Japan's Fukushima nuclear disaster in 2011, Taipei pushed to phase out atomic power and build what it called a nuclear-free homeland. But in recent years, energy realities have prompted a relook at nuclear power. Just last year, an attempt to bring back Taiwan's last operating nuclear plant, the Ma'anshan reactor, failed to materialize. Although voters backed the move by a wide margin, the turnout did not meet the legal threshold needed for it to pass. And for more, let's bring in CNA's senior correspondent Victoria Jan live from Taipei. Victoria, walk us through some of the factors that's behind President William Lai's reconsideration of nuclear power now.
Well, there are a few key reasons behind this shift. First of all, Taiwan's electricity demand is rising very quickly, especially because of AI, data centers, and chip production, which all need a lot of stable power. Second, there are growing concerns about energy security. Taiwan depends heavily on imports, and natural gas alone makes up half of its electricity. That makes Taiwan quite vulnerable if there are disruptions. Third, there is pressure to cut carbon emissions. Renewable energy is growing, but it's still not enough on its own to meet demand. And finally, there is a political factor. New laws now allow nuclear plants to apply for extensions, which gives the government more room to reconsider its options. So President Lai is saying this is about making Taiwan's energy mix more stable and more resilient, while still continuing to develop renewable energy.
Also, the situation in the Middle East, that to a certain extent must be affecting Taiwan's discussion on nuclear power.
That's right. The conflict in the Middle East is adding real urgency to Taiwan's energy debate because it highlights how exposed Taiwan is to global supply disruptions. Taiwan imports almost all of its energy, and much of that supply has to pass through key shipping routes. So if tensions escalate, there is a risk those supplies could be delayed or disrupted. Analysts are warning this could have a ripple effect beyond energy. Taiwan's economy depends heavily on stable electricity, especially for semiconductors and high-tech manufacturing. So if energy supplies are disrupted, it could affect production and even global supply chains. That's why energy security is now becoming just as important as the green transition. President Lai is urging that Taiwan needs a more resilient energy mix, and that's why nuclear power is being reconsidered. But this is still a sensitive issue at home. Environmental groups remain strongly opposed, and that at the local level, there are calls for strict safety checks and better emergency planning before any restart is considered. So while the Middle East conflict is not the only factor, it is clearly accelerating the conversation and pushing Taiwan to rethink how to balance energy security with its long-term green goals.
Oh, many thanks for that report. CNA senior correspondent Victoria Jen live from Taipei. Now, Singapore and Australia will speed up trade negotiations covering essential supplies, including petroleum oils. Both sides will also explore options for bilateral arrangements, and this includes consultation and early notification in the event of potential disruptions. These were outlined in a joint statement on energy security by Singapore Prime Minister Lawrence Wong and his Australian counterpart, Anthony Albanese. Both countries expressed deep concern over the situation in the Middle East and its impact on the region, including energy supply chains and prices. Well, they reaffirmed the commitment to strengthening energy security and supporting the flow of essential goods, including diesel and liquefied natural gas. Both leaders also called on other trading partners to keep global energy supply chains open. For more coverage on the Middle East conflict, do log on to cna.asia for the latest, including this story on questions over U.S. preparations for the war. Coming up on East Asia tonight, Japan's bullet trains are getting a surprising new job, delivering cargo at high speed.
The massive disruption to global energy trade following the escalation of military conflicts in the Middle East is another wake-up call for viable alternatives to traditional maritime routes. And Malaysia wants to position itself as a regional logistics and connectivity hub.
We'll bring you a special report on the calls for a structural shift towards a multi-corridor strategy. Hello again. As promised, Henry Yin is standing by now with more business updates. And Henry, we are not talking about oil prices this time around. Instead, we're talking about Japan's high-speed passenger trains. Apparently, they're getting a new job. Tell us more.
Well, that's right, Oteli. Well, the country launched its first cargo-only bullet train service today in a bid to deal with labor shortages. Japan's high-speed passenger trains, which have been symbols of the country's post-war recovery and innovation, are taking on a new role, carrying freight alongside passengers. That's as Japan faces increasing pressure on its logistics sector, including labor shortages and rising delivery demands. JR East, which runs 3 high-speed train lines north of Tokyo, has started the country's first cargo-only bullet train service. It's repurposing older Shinkansen trains. Seats are being removed and replaced with cargo space, allowing each journey to carry up to 17.4 tons of goods, from fresh seafood to electronics, particularly during quieter off-peak hours. Well, the shift would help ease strain on traditional freight systems and make better use of trains not in use, while keeping the high-speed rail network efficient and economically sustainable. There could also be a boost for tourism. Faster delivery of regional produce and souvenirs means visitors can enjoy fresher, locally sourced products, while a more streamlined rail system improves connectivity to different parts of the country. Operators turned to alternative revenue after passenger numbers plunged during COVID-19, a move that underscored a broader trend, with Japan's population expected to fall 15% to about 105 million within 25 years. As rising geopolitical tensions redefine global trade routes, logistic experts are calling for a structural shift toward a multi-corridor strategy to move cargoes via rail as an alternative to traditional maritime routes. Well, CNA's Melissa Goh finds out how Malaysia can play a role as transit hub for greater Euro-Asian connectivity.
The Perlis Inland Port in northern Malaysia, close to the Thai border, is one of Malaysia's trade gateways, positioned to enhance rail and cargo connectivity. Now operated by Mutiara Perlis, the hub offers an alternative to maritime-dominated logistics in the region and beyond.
So when people look at Malaysia, people only see our marine ports. But then we are actually connected via rail all the way to Europe. So why don't we enhance that connectivity so that cargo can also do a stopover in Malaysian ports and continue the journey to the destination like in Central Asia. So I think that's the way forward for all the players. Global shipping lines, they need to have alternative. They need to have a multi-pronged strategy, because things will not be the same. There'll be war after another. We never know. It's a new normal.
The launch of ASEAN Express in 2024 already connects Malaysia through Thailand and Laos to China's vast railway system. From there, the connections integrate into the broader Eurasian land bridge via the Middle Corridor, involving key countries in Central Asia, Azerbaijan and Georgia, before linking to the wider European networks through Turkey. Now, following the military conflicts in the Middle East that severely disrupted shipping routes, Perlis Inland Port has seen a surge in quotation requests from exporters.
Our commodity, palm oil, is very popular. So we have requests for quotes from Perlis via truck or rail in Thailand and all the way to Uzbekistan and Afghanistan.
Although freight cost by rail is higher compared to maritime routes, it can cut shipping time to Europe by up to 14 days.
Now, if the tracks are already connected, why hasn't the rail corridor taken off? Now, he said various operational complexities, from rail gauge differences to multiple customs regimes across the transit countries, continue to hold back its full potential.
It's not just physical connectivity, there's also the institutional connectivity. ASEAN single window that is in place. Of course, there are some countries who has yet to ratify the implementation of it.
Now, while a multi-corridor strategy is key to strengthen connectivity amid geopolitical risks, the government has tasked major ports in the country to handle possible increase in cargo volumes.
Dalam aspek ini, pelabuhan-pelabuhan kita juga perlu berusaha mengambil peluang menambahkan pengendalian kargo yang biasanya melalui pelabuhan-pelabuhan di Jebel Ali, Khalifa Port, Sarara Bay dan Muscat.
Now, the massive disruption to global energy trade following the escalation of military conflicts in the Middle East is another wake-up call for viable alternatives to traditional maritime routes. And Malaysia wants to position itself as a regional logistics and connectivity hub. Melissa Goh, CNA, Kuala Lumpur.
Grab is gobbling up Foodpanda in Taiwan, breaking into its first market outside Southeast Asia. Well, the Singapore-based ride-hailing and delivery firm is already operating in 8 countries in Southeast Asia. Well, the deal is an all-cash acquisition to the tune of $600 million. When the transaction completes in the second half of this year, it will give Grab access to 21 cities across the island and contribute $60 million in profit before tax and depreciation in 2028. Users will be migrated to Grab's existing app by early next year, assuming the acquisition goes through. The agreement is still subject to regulatory approvals. Delivery Hero is selling off the Taiwanese operations of Foodpanda as it comes under shareholder pressure to streamline its global business. Grab shares on Nasdaq declining more than 1% in pre-market trade following the announcement. And that's all from me. Back to you, Tally.
Thanks so very much, Henry. Now, the United Nations sounds the alarm on global warming, confirming that the past 11 years have been the hottest ever recorded. A report from the World Meteorological Organization showed that every year between 2015 and 2025 ranks among the hottest since records started in 1850. It adds that last year was either the second or third warmest year on record, at around 1.43 degrees Celsius above the pre-industrial average. The report also confirms that 2024 remains the hottest year ever recorded, at about 1.55 degrees above pre-industrial levels. Now, UN Secretary-General Antonio Guterres says that the global climate is now in a state of emergency.
Greenhouse gases concentrations are higher than at any point in hundreds of thousands of years. Global temperatures continue to rise, and humanity has just endured the 11 hottest years on record. When history repeats itself 11 times, it is no longer a coincidence. It's a call to act. Meanwhile, our oceans are absorbing epic levels of heat, fueling ever stronger storms. Glaciers and sea ice are vanishing, and sea levels are relentlessly rising.
The UN report also warns of glacier mass loss, with some of the worst melting on record reported in Iceland and North America. The findings come as governments remain under pressure to keep long-term warming below 1.5 degrees Celsius. That wraps up this Monday's edition of East Asia Tonight. Don't forget your headlines anytime at cna.asia. And look us up on all the socials, including Facebook and YouTube. Thanks for watching.